This is a story about Randy Magana and the fire that destroyed his home. At the time, he lived with his girlfriend Nicole, who later became his wife, their 2-year-old son, and his 7-year-old daughter.
We met in, I'd say, approximately August of 2005. And he was a single dad. He had Isabella, which I admired quite a bit, because a young single man in his 20s to take on a daughter with special needs who's nonverbal, not potty trained, and has, all of these dependencies, and here he's doing it.
In the early morning of November 3rd, 2006, Randy Magana experienced an electrical fire that started in his garage.
When the fire happened, I was sleeping in my room. Nicole was in the recliner with Derek, because that's where she could feed him and he would sleep easier in a recliner, when the security alarm went off.
And he just turned and said, I think we have a fire, get the kids, get your mom, get out. And I ran to the bedroom where my mom was, and I said, I think we have a fire, you need to get Grace and Isabella and get out. And Grace is our little Bichon.
He was, I saw him a couple of times just standing there looking at it like, there goes our house. Sorry. Anyway, it was hard. It was hard to watch them deal with that. It was hard for all of us.
He's screaming and yelling in the street, trying to hold his pants up because he doesn't have a belt on, in his slippers and no t-shirt. And at this point he's crying because this is our house. It's 3 o'clock in the morning and we're losing everything.
Randy had a homeowner's insurance policy with CSAA that covered him for losses incurred from a fire. CSAA sent in its personal property adjusters, Restoration Management, and Heritage.
They were very adamant about not messing with things that were in the house. Don't remove items from the house, because we're going to take inventory on them, and in order to replace them and all that, then they have to be inventoried, right? So
they removed everything from the house. They packaged it up, put it in boxes, and then put it in a warehouse of sorts. I never did see it. Nicole went and looked. And when she went and looked, she called me hysterically crying, saying, none of my stuff is there. Most of my stuff is gone.
Randy had a whole jar of change. He said the last time he cashed that in was like $300, $400, $500. That was gone. No word of that, no mention of that, no inventory list that was on.
I didn't think that these people were supposed to be like that. I thought they're all supposed to be bonded and safe to go into people's home and to restore it the best they can, or clean it up the best they can, I guess basically is what it's supposed to be done.
there was a list of items that I had stated, gave them and stated on numerous times, that I wanted to make sure that I got back no matter what. I wanted that Harley Davidson back, even if it was half burnt. My dad made that for me and I will never get that back. So I don't care how burnt it is or how covered in asbestos it is. I want it back so I can throw it away if I want to, but let it be my choice.
During this process, Randy and Nicole did not have a good experience. They found their property missing and unfairly valued.
Well, the discrepancies in the content list started from day one. Everything that they had pretty much went through on our content list was horrible. Queen size bed, it was a California king. So that was horrible. Just their content list was lazy, is probably the best word for that.
I guarantee my clothes were not bought at Walmart or Target or JCPenney's. Not to say there's nothing wrong with them, but I was a single young girl and I made good money. So I shopped at Macy's or Broadway Plaza and Walnut Creek, and I had Coach purses. I had at least 5 Coach purses, and Coach purses are not cheap purses. They wrote those in the contents list as mud purses bought at JCPenney's for about $29.
Well, my work jeans, 90% of them were Carhartt. Those are expensive jeans. They last a long time. They would just write a pair of jeans. So then when they would give you a price on it, it was $5 or $10. Those jeans cost $50 a piece almost.
It's like they came in with this lowball figure, and then she kept having to, go back and, well, no, this is what I paid, come up with the receipts, come up with whatever she had to do. And then they come back with still not enough.
It was like a huge slap in the face to see that this contents list of everything we had in this house, which was all of Randy's life and all of my life brought together, and the creation of our new child now, is gone. And you're saying that it was all worth $29,000? $29,000 would not have replaced the bed, the couch, the TV, and the furniture in the baby's room.
After a few months, bills start coming in for the house, for the furniture that they've bought, for all this. And they don't have the money because the insurance company isn't done doing what they need to do. So now they can't pay their bills. They can't pay for the the couches, the bed that they just bought. So now, and a lot of that Nicole had put on her credit. So now her credit's being ruined from all of this. And she's totally stressing out because she had good credit before.
CSAA gave Randy $5,000 to cover all of his family's initial expenses.
We bought what we needed right then with the $5,000, and then you don't realize all the things you need until you have nothing. So at first it was kind of a joke to us, and then once you start really needing to go buy stuff, we'd have to go back to the store and back to the store, because Derek lost all of his baby clothes. I mean, her breast pump to feed, all those kinds of things, bottles. They don't give you bottles and stuff like that for a baby.
Randy was given money for temporary housing, which was stopped, although at that time nothing was resolved regarding the reconstruction of his home, and they had to pay for the housing expenses from their own money.
The insurance company quit paying for the home that they were living in, and they had no other place to go. So that meant that even though they weren't living here, they're paying a mortgage here and they're paying a rental over here for them to be able to live in a home.
Most people don't understand, once your house burns down, you still pay your mortgage every month. There's no getting around that. You pay your mortgage. So we were paying our mortgage, and on top of that, we were paying the rent at the house we were living.
We didn't have $5,000 a month to pay for the rent of the house and the rent of the furniture, and then still have to pay the mortgage payment on this house and any bills and food and medical and all of that that goes with your everyday life.
We've had to borrow money from my father, her father, my employer, and on top of that, I was working 7 days a week for as many hours as I could.
There was a lot of times where he was so angry and on edge, and I completely understand why. But I felt like I was walking on pins and needles just trying to talk to him or ask him a question.
You lose sleep if you're getting sleep. I would work 12 hours. They'd have a job at midnight. I'd come back in at midnight, work, sleep an hour or two in the yard, and then go back to work the next day if they had it.
Derek either slept in his swing or his car seat because we didn't have a crib and we didn't have the money to buy a crib. And Randy was afraid that if he was in the bed with us that something might happen. They always say not to do that with babies. And I felt really bad by putting my baby to sleep in a car seat every night. He's not laying in his bed, he's sitting upright. What's this going to do to his spine or his back as he's growing and developing?
CSAA hired independent adjuster Susan Spencer to come up with an assessment of the damage and reconstruction costs of the home.
While dealing with CSA, we dealt with Susan Spencer. That's the only person we talked to. I talked to Clay Gibson one time, and he's supposed to be the large loss specialist. He called me once through this period of 6-8 weeks or so, and we just dealt with Susan Spencer. And her and Vanderbilt had put their bids together, walked the whole house together. They put their bids together because I came over here when they were doing it, and they were doing it together. They put their bids together, separate bids. Vanderbilt was higher than her. She was lower. How was she lower if they walked the same thing, did the same thing together, hand in hand, and they were different? And like a $30,000 or $40,000 difference. And so I'd asked her, I told her I'd like to have another bid. I don't want just her bid and his bid.
Unhappy with the initial estimates, Randy hired his own contractor to come up with reasonable costs for the repairs.
Well, when we hired our contractor, we had hired someone that we'd known for a long time, and that was Port Costa Builders. And when that happened, Susan Spencer was not happy. She said, I really like working with Vanderbilt. We know how to work together. Now, looking back at hindsight, I'm sure they know how to work together because it wasn't going to be in our best interest. But Susan didn't tell us is we worked from her bid and her bid alone. She said, once the job starts and you run into things, call me and I'll come look at it and we'll see if that's a problem or not, if you get more money. And as Kevin Dawson started going through her bid, she'd missed all kinds of things.
Randy's independent contractor recommended that, given the problems they were having, they should seek help from Kevin Dawson. Kevin Dawson is a licensed public adjuster who has provided insurance policy analysis and property damage claims expertise for over 20 years.
What I remember best about this was the worst part. This home was likely built in the 40s, and it was a small bungalow-style house. And I'd say probably in the 70s, there was an addition installed where it wrapped around the house. The addition brought the front porch out. It changed the roof line. It gave it like a cathedral roof design. It expanded out in the rear. So the house was probably doubled in size. And herein was one of the problems. The adjuster was clearly incompetent because they could not distinguish from the framing how the house was configured. And when I looked at it for the first time, I saw that the original home was like cannibalized by this addition. The addition blew up on all sides. So it effectively had two complete roof structure systems. And AAA only paid for the outer structure, and there was damage to the inner structure and an outer structure. So it was more of an analytical observation that AAA failed to properly investigate the loss and understand the damages and understand this unique design. And I met Susan out at the house and the contractor that she used, and I pointed out, the massive misstatement of the roof system. And that alone was, I can't recall the numbers, but I believe that alone was $25,000 or $35,000. And you add in overhead profit plus materials, and then all of the ancillary damages caused by this additional demolition. And even after that meeting, Ms. Spencer lowballed the bid and deleted scope issues.
So they had missed quite a few things, and they didn't want Kevin to see that. I think they knew they missed it, and they were just going to see how far they could go without having to pay that.
The adjuster had taken the contractor's estimate and knocked it down. And I thought that was immediately improper. Since Susan Spencer can't and doesn't rebuild homes, and she doesn't have a contractor's license, and Cunningham Lindsay certainly couldn't warrant the habitability of Mr. Magana's home, I thought that it would be best and appropriate to use the contractor supplied by the insurer, or in Randy's case, he wanted his own contractor. But if we worked out a fair and reasonable, equitable solution, we could have used either contractor. But in this case, there appear to be manipulations in the bid by the independent adjuster that had not been explained to Randy, and some that had not been explained to me. We try to get 100% of the items and then work to get the best valuation on those items. But in Randy's case, something different happened. As I continued to revise and expand the scope of repair to cover 100%, what I didn't know was what was deceived, the deception that Randy was under before I was hired. Things had occurred before I was hired. So I would not have seen something in the estimate like the hardwood floors. I didn't know there were hardwood floors there. There's no way I could tell. The asbestos abatement had occurred, the floors were stripped. So you're looking at a plywood floor, unless someone says there's a hardwood floor there covered with a carpet and carpet pad, you wouldn't know it. So when I'm comparing the estimates, all I see is carpet and pad. When I discover that another item has been omitted, we make claim for it outside of the appraisal, and I believe that's what led to this lawsuit, because that claim was avoided and denied. They refused to honor the claim. That claim had not been appraised. So it's a problem, and it begins with the direct network providers. But they're driven by the insurers and the adjusters' desire to tamp down the value of the loss.
Clay Gibson, the large loss adjuster handling the claim, left CSAA, and the claim was reassigned to another adjuster, Rick McMullen.
So we were assigned a completely new adjuster. So when we're trying to make these phone calls, point of contacts that we have are no longer with the company. And now you're talking to this person. Well, this person, I think it ended up being the Rick McMullen or something. He had no idea what was going on. He'd never been involved in the case. The case at that point, I think, was close to coming on almost a year, maybe.
Rick would then send it to Heritage, and it would disappear for months at a time. And Heritage would come back, and then Rick would dutifully pay Heritage evaluation. But he didn't analyze it, he didn't supervise it, he didn't question it, he would pay it. So then when I received it, I would then completely revalue the loss again to try to show that Heritage was wrong and resubmit it. So that went on 2 or 3 times, and each time it took 2 or 3 months. This whole process is intended to wear out a policyholder, and a failure to evaluate the loss by the next adjuster in line is just, it's a heartless act.
Unable to resolve the situation, Kevin Dawson called for an appraisal hearing.
Finally, when AAA accepted the appraisal demand, as we prepare for the hearing, we find that Susan Spencer continued to use versions of estimates that we had never seen before. And the contractor had versions of estimates that we had never seen. And we discovered during the course of the hearing that there were omissions made that had never shown in any version of the estimate, specifically the hardwood floors, which was a significant cost. And only in the hearing did the contractor for AAA admit damage to the floors. He thought the floors were in his bid, but they were conveniently missing from Susan Spencer's bid that was provided to me as the basis of the settlement. We don't believe that was an accident either.
Do I think their actions were intentional? It sure looks that way. You don't miss this much stuff accidentally. I can understand something here, something there, small things. What they missed were large. Nothing small was missed. They missed large items which indicate large amounts of money. So yes, I think they do that all the time. And if I wouldn't have hired other contractors than AAA, I would have never known.
The first time it happens, one can say it was a mistake. The second time, one can say it's a misunderstanding. The third time, to me, it ratifies the motives and intent of the insurer or their vendors to deny a policyholder the benefits that they have under the contract.
In the very beginning, they make it sound like they're going to make this easy. Once you start getting in and saying, hey, I found another problem, they don't want to help you anymore.
The money that I asked AAA for in McMullen after the appraisal hearing, once I discovered that significant items were concealed from us, that would have been enough to resolve the claim. It still wouldn't have adjudicated the fairness, but it would have allowed them some comfort. And McMullen refused to make those payments. As bad as the policyholder needed that money, he refused to make those payments.
To resolve this, we're going on 6 years. Yes, 6 long years.
I told him, I said, Randy, you can take the money now that we've gotten you substantially more, and you accept your losses. He says, why should I accept my losses? I had insurance. I had a right to be paid properly and honestly. I'm now willing to accept these losses.
I wouldn't be doing this if they dealt with me fairly. This wouldn't be going on for 6 years if they dealt with us fairly. Sounds like they have a history of this. It's too bad because most people don't want to do this. I don't want to do this for 6 years, but I also don't give up. I'm stubborn. I'm not going to let them beat people down like they do. That's not right.
It should have never taken this long. Even 3 years was too long. In 3 years, that was probably the hardest part, was the first 3 years, because it was constantly being kicked when you were already down. They try and wear you out. They try and exhaust you with all of these hurdles and steps that you have to go through. And then, yeah, the creditors and everybody that's on your back that you're trying, hold on, people, remember, like, I didn't ask for this fire to happen.
If I saw it one time with one company, maybe it's an anomaly. But I believe there's a consistent pattern here, and I've only had a couple of claims with the same people. I've had other AAA claims during my career helping policyholders, and I've seen very similar practices.
Had they done it right, we would have been back in within a year. We would have had our personal property stuff replaced. We wouldn't have felt violated. I wouldn't have felt like a victim more than once,
It takes a case like a Randy Magana to teach the claims management of CSAA that you're not going to get away with this. You're going to treat the policyholder fairly. You're going to properly compensate them. You're going to measure their losses, or we'll be back.
Somebody should be held accountable to make sure that you are given, what you need, that the bids are done properly, that the houses get rebuilt in a certain amount of time. And if any of that's not done, then AAA should be held accountable for not following rules. I mean, we already were victims to the fire, enough as it was, and then victims to the people that tried to come by and take stuff. But now we're becoming victims of the people that AAA hired to take care of us, to come in and do this. If I'd have known, I would have never let them step foot in my house. I would have never. I would have done it myself if I could have.